no one is going to change policies that quickly. I think we've already touched on some of the more subtle changes. Taxation clearly has an important part to play. Interest rates is a really interesting one. My own personal view is that I think interest rates are going to rise sooner than people expect. My guess is that possibly sometime next year they'll begin to rise. In the past, they tend to rise faster than they come down, so they'll probably go up in 0.5% and come down in 0.25%, and my guess is they'll go up pretty quickly by two 0.5% steps. What we have to bear in mind is if you're only paying a mortgage rate of 1.92%, an increase of 1% is actually, in percentage terms, quite a big increase in people's budgets. So I do believe rising interest rates is something that should be taken into account. I know the lenders do stress test buyers now as to whether they can afford it, and I think that will hit confidence if rates start rising.
Andy, I'm just thinking, we're all, I think all of us here are of the generation. I remember 15%, yes, with that. Younger ones here, 15% interest rate. Yep, that's what we were paying at one stage. Those, you know, because everything is so low, if we get that 0.25 point and 0.5 point rise as early as next year, as Michael seems to be saying, that's going to have an extraordinary impact, isn't it? People are going to think, whoa, that is instantly going to drag huge amounts of cash out of people's pocket in a way that a generation hasn't seen.
I mean, I trust basically that the lenders have within, when granting mortgages, have stress tested applicants to take into consideration a 1 or 2% increase. In fact, it should be more like 3%. We mustn't forget also that actually we're assuming that wage inflation is nil. So, you know, small rates of increase, I think, could actually be taken on board. It's how quickly these rates occur and how much by. That's the worrying factor for me. And currently, I can't see anything in the economy that says actually the rate's going to go up quickly and by large amounts.
Fixed rates weren't a feature of the market back in the time that you mentioned of 17% interest rates. Most mortgage rates were variable back in those days. These days, we've been selling maybe 90% of the mortgages that we've been doing, Andrew's been doing with us and so on a fixed rate. So I don't think there'll be an immediate impact because most mortgage borrowers currently have fixed rates. So there will be a slightly sort of dampened impact when interest rates start to rise. But we would say, without it sounding too much like an advert, this is a really good time to remortgage, to secure your family's budget and get a good fixed rate.
It's Tom, your view on where interest rates are going and the impact that's going to have on the private sector, on buy-to-let, rentals?
We're so used to low interest rates. It's going to be a bit of a shock when they start to go up for a lot of people, because a lot of people got into the housing market and interest rates would have been going down or have stayed low. So going up to 3 or 4%, 5% is going to be a bit of a shock to them, and the amount of money they have available to spend.